Hey everybody, I hope that you can hear me and see me well. But most importantly, I have one of our local lenders that is going to be able to answer some questions about construction loan. Now, in the last couple of months, I've had quite a few customers interested in building versus buying property. So that's why I thought Monday is going to be a pretty tough day for the lenders, but I'm gonna bug her so then you can ask your questions and I will also ask my questions. We are with Barbie Wiggins, Kristen Blossman team. Thank you so much that you're taking me in your office here for a quick question Q&A. So Barbie has been working with quite a few of my customers, and I know that she knows a lot about construction loans. So I just want to ask, let's start with this because I have a bunch of questions, but you can lead me here. So what is construction loan and who is construction loan for? Like, what is this for?
The construction loans are meant for people that want to purchase a lot or already own a lot and they want to build a house on a residential property. Okay. So we offer the financing that can either help you purchase the lot and do the construction loan at the same time, or if you own a lot and have a payment already on it, we can refinance that loan into a construction loan to help you build on it. It's as little as 10% down if they don't already own the lot. It's the same process as buying an existing house. Okay. Nothing's really different there. We still get the same documents, pre-qual the exact same,
pretty much.
Go through the loan underwriting the exact same.
Okay.
We'll order an appraisal based on the builder contract, plans and specs. Okay. And then that's how we'll know what the value is.
So yes, about the appraisal, it was something that we talked a little bit earlier. Can you explain how the appraisal works with construction versus, usually appraisal is when we have a home and the appraiser goes and checks, all the details on the house. So when we don't have a house, what is the appraisal go for?
You're going to send the lot contract or the lot address. The appraiser is going to look at that as well as the plans and specs as well as the builder's cost breakdown.
Okay.
And then once the house is complete, we do send the appraiser back over there to take pictures to make sure the house has been completed for when we modify the loan into a permanent loan.
So if appraisal is met in the beginning, is it like a second appraisal after the house
They're
is built?
not going to give a new value, even though it might take 15 months to build a house. The value is still going to be the same as the initial.
Okay.
But we're getting them to go back out just to show that the house has been completed since the initial process.
Okay. All right. And another question that I have here is who can build? What are the requirements of the builders?
So really, you can have any builder. If they're not already approved with the bank, we do have a builder application and a process the builder has to go through to get approved.
Is it an easy process?
It's pretty simple. It's like a couple-page application, and they supply a few financials, and it's being reviewed by our construction manager, and then the builder is approved to build with our bank.
Okay, and I think quite a few clients were interested. Is there any ways that they can do some of the work themselves so they can save a little money on that part?
Yes, I do get that question a lot. We do allow self-builds from time to time with exceptions, but it's not very common, but there has been exceptions where they will grant it.
It is possible. Okay, good to know. Another question that actually you mentioned something earlier is have you noticed any equity differences between built ready, like when people are buying a ready home and when they,
Yes, I have noticed when people are buying existing homes, I don't see a lot of equity when the appraisals come back, very rarely, but sometimes on these construction loans, depending on what the building cost is, I do notice a lot of equity when they build the houses versus buying existing.
Is that like in the last,
the last couple of years since I think we've been doing them, I see a lot more equity in the building ones.
So let's say someone builds a house, right? There is 100, let's say just 100,000 equity. Can they refinance and go that route after a certain amount of time?
They probably won't see that much equity, but they're depending on what the cost of the house is. But sometimes there is a good chunk of equity. But depending on what the rate is, they may not want to refinance, but yeah, you can always do a cash out afterwards, or get a home equity line of credit if they wanted to add a pool afterwards or something like that.
And use the equity to build a pool and kind of complete.
Yeah, it just kind of depends on each scenario, but
that's nice.
Yeah,
nice. And minimum down payment for a construction loan.
So for
are there varieties?
Yeah. So on a primary home, you're probably looking at 10% down on the total lot plus cost of build total. And then on a second home, you're looking at 20% down.
Just like investment property.
20,
25. Okay. And any wiggle room here? I mean, can they go less? Or these are the
There is a less option. We do a VA construction loan. So for any of your primary home people that are qualified for VA loans, we do 100% financing for VA construction.
100% financing for VA construction.
Mm-hmm.
All right. I think that's a
good one.
That's a good one. Right. Rates. Can you tell us about the rates on the construction, or did you mention that already?
I have not yet. So construction loans, when you're doing the construction loan, you're going to pay interest only during the time the house is built. The interest only rate is going to be a little bit higher. The construction rate's higher than what it will be when the house is built. So for example, right now, the interest only rate on the construction loan is at 3.5%. And when the house is modified, or when it's built, we modify the loan from a construction loan into a permanent loan. And if someone modified today, the 30-year fix would probably go down to 2.625, give or take.
Can they lock that rate when they start the process, or is something ongoing?
They can lock the construction rate in, because we're going to try to get that loan closed within 30 to 45 days.
Okay.
But the permanent rate, unfortunately, we cannot lock until the house is maybe 45 days out from getting its certificate of occupancy.
Okay. And how long of a time you're seeing nowadays, since you've been doing this for
the
couple
bill
years now?
Is taking probably about 15 months. So
15 months.
You're going to have
Walton County or all over?
All over.
Okay.
Yeah, even in South Florida, the ones we've done down there, it's taken about 15 months.
15 months. So okay, average 15 months. Okay. Okay. What else? I was missing. Can someone that owns the lot? Okay, if a person owns the lot, can they use that as a down payment?
Yes, if someone owns a lot free and clear, that equity can be used for down payment to help them keep a little cash from coming out, less cash out of pocket.
And how do you know how much the appraisal?
So if they own the lot, the way the appraisal works is it looks as if it's a refinance. So it will use the total house build plus lot as the total, and then we subtract out the cost to build there on the loan to value.
Okay.
That's kind of complicated, but it's working as a refinance if they already own the lot.
Okay. But I mean, they can save money if they have, let's say someone have purchased a lot in a very good market, then that's going to save them from the down payment.
And if they own a lot with equity in it and they owe a small chunk of it, we can refinance that into the full loan. So they'll be paying off any loan that they may already have on their current lot.
Sounds like a complicated process.
Yes,
sure.
it's a lot of information.
Pieces involved here. Okay, and what is a question that I think you mentioned something earlier that
So it's a one-time close. You're going to pay all your closing costs in the beginning when you close on the construction loan. You will go back to closing when the house is built.
Okay.
And then there shouldn't be any other closing costs at that time, except for if there is construction interest due, if the insurance quote that you may have gotten prior to the house being built changes. Ideally, you don't have to come back to closing with extra money when you modify it, unless those things are outstanding or change.
All right. What else do I have on?
So the payments, the way it works is when you get your construction loan and you close, typically you're going to have very small payments in the beginning. There's normally about 7 draws on the construction loan. So in the very beginning, the loan amount that you close for is going to pay for the lot, whatever the lot price is, and the builder normally takes 10% off of the total cost to start.
10% of the total.
And then he has certain draw requirements he's going to meet as our inspectors go out to inspect it to make sure it's done, and then he gets another draw. So in the very beginning, you're going to have very small payments. And then as the house gets more and more complete, more and more money is being drawn out, so the payments increase.
So then you pay interest on the bigger amount of
Yeah, so it's all interest only, and then about 45 days out, if it's a conventional loan, we have to re-qualify you, meaning we have to get additional tax returns, pay stubs, and re-qualify you to modify the loan. If it's
this is where you can have the new rate.
Yes, you can lock in the new modified rate at that time, and hopefully rates stay the same or they're lower than what we originally started.
Okay, all right. I'm not seeing any extra questions over there, and from the list I asked, I guess, is there anything different when you're applying for construction loan in general?
It's going to be exactly the same. The whole loan underwriting process is exactly the same. The only difference is we're using a builder contract instead of a normal existing house contract. But the same documents from every other loan are going to be required for this one.
Okay.
And if it's a VA construction loan, we do not have to re-qualify the borrower when they do their permanent. It's only for conventional.
All right. Anything else that comes to mind that I haven't touched on? I know I asked earlier about the credit score, debt income ratio, which is just like with any other loan.
The credit scores need to be around 710 for the construction loan, and I believe the debt to income ratio needs to be around 45%.
Okay. Well, hopefully that's a... All right. I am not coming up with any more questions, and I am not seeing any questions asked here. So I hope that you were able to catch all the complications in this.
Very complicated, but we have it down pat.
Right. So they're doing this for quite a while. So if you guys have any more questions about construction loan, or you do condo financing,
VA, FHA, USDA,
you name it.
Everything.
So if you have any questions, please reach out. Again, this is Barbie Wiggins. I'm Eva Pierce with Coldwell Banker, and we will be happy to answer any questions that you might have. I hope that was good information for you guys, and reach out and wait for the next one. Bye-bye.